Welcome to our deep dive into DR Horton Inc., America's largest home builder. Can its stock hit $1,000? We'll analyze its financials, pros and cons, dividends, and future outlook, plus compare it to competitors and indices. Let's get started. Dr. Horton, ticker DHI, has been the U.S. top home builder since 2002, operating in 125 markets across 36 states. It builds single-family homes, townhomes, and more, with additional revenue from mortgage financing and title services. In fiscal 2024, it reported $36.8 billion in revenue, but 2025 saw a 7.3% decline to $34.6 billion, reflecting market challenges. Pros: Dr. Horton's market leadership and operational efficiency drive strong returns, with a 16.1% return on equity. Its diversified income streams and $2.79 billion in free cash flow provide stability. Cons: the cyclical housing market, $7.36 billion in debt, and a low 0.98% dividend yield pose risks. Regulatory changes and competition, especially for entry-level buyers, could pressure margins. Dr. Horton's gross margin is 23.6%, operating margin 14.8%, and net margin 11.5%, but margins dipped in 2025 due to lower demand. Its $7.36 billion debt is manageable with $2.91 billion in operating cash flow. The company pays a $1.60 annual dividend, yielding 0.98%, with a recent 33% quarterly increase to 40 cents. However, it's not a dividend aristocrat, focusing more on share repurchases. Since its 1992 IPO, DHI has delivered solid returns, though it lagged the S&P 500 recently, dropping 6.4% versus the index's 15.7% gain. Looking ahead, Dr. Horton is investing in affordable homes and lot development through its subsidiary, 4Star, targeting growth by 2030. By 2040-2050, sustainable building and acquisitions could drive gains. However, rising interest rates, regulations, and labor shortages are risks. Can DHI hit $1,000? At $160, $200 today, it'd need a 400-500% jump, tough by 2030, but possible long-term with exceptional growth. Compared to competitors like PulteGroup and Toll Brothers, Dr. Horton's scale and affordability focus give it an edge. Smaller players like Beazer Homes have higher debt and lower margins. Against the S&P 500 and global indices like MSCI World, DHI's higher volatility, beta 1.34, makes it riskier but potentially rewarding in a strong housing market. Dr. Horton is a solid long-term bet for housing demand, but its path to $1,000 depends on market conditions and execution. What do you think about DHI? Drop your thoughts below, and subscribe for more stock analyses.